Here now is Richard Pike, the CEO of Adcorp, that company out with results. Normalized earnings per share down 19%. That's for the year to the end of February. Richard, thanks very much for your time. We've got to kick off with the employment numbers out today. We lost 171,000 jobs in the first quarter of this year, and it's certainly very disappointing for the market. It directly impacts your business. So what does it say about conditions going forward?
Yeah, Bronwyn, I think we mustn't read too much into those numbers yet. It's not totally unexpected that you'd see a decrease in employment in January, in the first quarter, and largely related to a lot of the infrastructural projects that have come to an end. So we've seen the soccer stadiums now built, a lot of the World Cup infrastructural projects completed. So there is a demobilization of workers, and that was to be expected. If I look at our numbers, we put out an index on a monthly basis, and our index is showing a slight recovery in terms of employment, albeit that the majority of jobs created at the moment are contracted.
So do you believe that Stats SA has got it wrong? No,
I don't say they've got it wrong. I just think it's an aberration. I don't necessarily think it's a trend. So I think we need to see what happens next quarter, and that'll indicate whether it is actually a trend. My inclination is it's not a trend. It's an aberration given the demobilization of those workers post-World Cup projects coming to an end.
The two areas of your business under pressure, the flexible white-collar staffing unit and the permanent recruitment territory. What are you seeing on that front now? Are we seeing return to some traction in the market?
Yeah, definitely. If you look at our biggest industrial exposure, it's in the banking sector. And the banking sector were the first people to feel the pain. Just before the country went into recession, and we're starting to see employment again in that sector. So that gives me some kind of measure of hope that we might be coming out of this thing. I think if you go sector by sector, it's kind of mixed. Definitely with the benefit of hindsight, looking at the recession, the banking sector or financial services was a lead indicator. Manufacturing tended to be a lag indicator. If that's true, then financial services, a lead indicator, is starting to show that we are coming out of this thing.
Just looking at your EBITDA margin at 5.5% and in the prior year at 6.8%, do we have reason for concern? The market doesn't think so, because you closed at 27 Rand today, up 1%, outperforming the broader all-share.
Look, it's predominantly a mix issue. As you rightly said earlier, the white-collar contracting and the permanent recruitment businesses had a tough year. They are much higher margin than our blue-collar businesses, and we saw quite good volume growth in the blue-collar businesses. So they come in at a much lower margin. So the profit contribution that they made is greater than it was last year, albeit at a percentage that's lower than.
But must we get used to EBITDA margin at 5.5%?
Yeah, definitely. I think for us to get back to 6.8 is probably going to be difficult, but I think we'll get back to 6% in the current year if the volumes come back in permanent recruitment and white-collar, as we're starting to see them coming back.
You believe in the economic recovery in South Africa taking hold?
Yeah, I think muted. Certainly, I don't think we're going to see a lights out scenario, but there's no doubt that things are on the up and up.
Richard, thank you very much for your time. That was Richard Pike, the CEO of Adcorp. Again, that company out with full year results to the end of February. Normalized earnings down 19%. The share price at 27 Rand, up 1% on the day. Nick, coming back to the market, what can we expect as we move into the rest of the week? Are we going to see, is this the beginning, in your opinion, of a severe sell-off on markets across the world?
It's difficult to forecast what's happening with so much information coming out. There's no doubt about it. We are hitting some severe headwinds. The markets had run a little bit hard. I mean, it doesn't take a genius to work out. The S&P up 80% in a year, possibly run a little bit too hard. And we keep on saying this. We can only look at what we've done in the past, and markets significantly higher than we were pre-Lehman's. And the world is in a very different place then. In fact, it looks a little bit more precarious right now. People talking about Spain and Portugal being the next Bear Stearns or the like. I think maybe it's a little bit much, but there's no doubt.
Would you still be short the market?
I'll still be short until we see otherwise. I think we haven't had that big correction on the Dow. I think the Dow and then the S&Ps has had less than a 1.5–2% move our last 500 trading days. That's getting to very abnormal situations. A lot of it's to do with interest rates being kept artificially low and people chasing the best return on their money. They're not going to put it in the bank. There's still that liquidity flying up, and all of a sudden, that liquidity trying to find a home, the equity markets doesn't look like a sure one-way bet.
Nedbank out with a trading statement today saying that non-interest revenue for the quarter to the end of the March was 18.9% higher. Obviously today Nedbank being impacted along with the broader market, but anything particularly that stands out for you on Nedbank?
I don't have a quick glance to the net bank of things, but it does seem like their loan book, certainly from the man on the street, looks a little bit better than it was. The one worrying thing, though, the corporate on the lending side, you do get the feeling that they aren't lending like they should be lending at the moment.
And then Netcare, I don't know if you've had an opportunity, it has been obviously like the Wild West on the trading desks today, but they came out with a trading update saying that headline earnings per share expected to be 20 to 30% higher, and that's at the interim headline earnings
Yeah,
line.
I saw that. It came across the wires a little bit earlier. Quite encouraging. That's been an interesting one as well. They're heavily exposed to the UK property market. Worrying about all sorts of government tenders certainly with the NHS coming to an end, or how they're going to work going forward on that side. But so if they got their way through this, it certainly looks like one of those ones to watch too.
Nick, when you see dramatic moves on the market, as we've seen in late trade today, do you sleep tonight, or do you focus on the TV channels watching what happens in the US? You've got your Reuters terminal.
When I was younger, we used to go look at the Bloomberg at 4 in the morning and see what's going on. But then, as you get older, you realise the market's shut. There's nothing you can do about it. So I think I'll sleep tonight.
Nick, thanks very much for your time. Nick Kunze, head of dealing at BJM Private Client Securities.